Good evening, everyone. This is Shrikant Rajan, and welcome back to Market Pulse, where we discuss what's happening in the market across the globe and what happened last week and what could be expected in the upcoming weeks. If you are not able to take time on a daily basis to listen to a podcast, then at least this podcast on Sunday at 7 p.m. is something that you should not miss because this is where we cover kind of everything that happened last week and the upcoming weeks. Let's get started. The first important thing I would say is Indian stock markets are at all-time high again, and absolutely thrilling week I would say because nobody ever expected Indian markets to hit an all-time high last week, and Indian markets have finally done that after a long consolidation. Even when other global markets were performing, Indian markets were taking a break. And finally, last week, the market has kind of broken out. So, this is exactly something that we have discussed a few weeks back. What exactly happened? So, who has the highest weightage in Indian stock market in Nifty? Yes, it is HDFC Bank. So we know HDFC Bank has been underperforming for a real long time. In last few months, it has actually fallen down by almost 18%, and still Indian markets are very hovering around the same 22,500 level. So this was a great thing. And there was this data that came out that said that HDFC Bank deposits have actually grown higher, and that is a positive thing in such kind of environment where a lot of people are still investing into the markets. When the deposit growth has grown higher in HDFC Bank, that was taken as a big positive, and the markets could see HDFC Bank actually rallying up. In fact, the entire last week, if you just open the charts and check, HDFC Bank has actually rallied up really well, right from almost 1,400 levels to more than 1,500 now. So that is something which gave a lot of positivity to the Indian market, and Nifty has also rallied up. Now, one important thing that you should actually watch here. See, of late there was some selling by the FIIs. FIIs are who? The foreign institutional investors. So they have sold some stocks, their holdings in HDFC Bank. HDFC Bank is one of their favorites, in fact, and their holding level had come down to around 48-49%. So there is a rule that above they cannot have a holding more than 51%. Now, about 48% means there is a gap of almost 3%. So that is kind of giving a feeling that there could be 3% of HDFC holding is a big number in terms multiple crores. So that kind of money is what could be expected to be coming back into the into the HDFC stock once the bank settles. So this kind of triggered a rally in the HDFC Bank, and that led to markets actually scaling up so much. If HDFC alone rallies further, we could see brand new levels, nothing to be surprised about it. But does it mean the markets are going to rally further? And what is so that we should do with our investments in the market? That could be in any form in equity, that could be mutual funds, PMS, AF, or even intelligent advisory portfolios. So that is something that we will discuss in a while. Markets are markets. They are going unpredictable, and the markets are getting seriously volatile, killing a lot of traders. But then we have started off this week with a great trade that we had done, and we are already sitting with more than 1% profit for this new financial year. The markets have been good as of now, but what is the expectation in the upcoming few weeks? Let us talk about short term first, about this week coming ahead. So the first thing to look at is the US Federal Reserve meeting minutes. The meeting is already over, you know that, but the minutes of that meeting is going to be released on Wednesday. So that is something to be watched. For India, we have the expiry this week on Wednesday because Thursday is a holiday for Ramzan. So because of that, since the expiry is on Wednesday, after Indian markets close, this data would come, and the effect of this can be seen on Friday. So that would be something to be watched from this week's perspective. Similarly, one more important data that is coming is the CPI, the Consumer Price Index, or the inflation data for the US. So we know those who are following the channel have already must have noticed how markets are dependent on the interest rate decisions, and all this is based on the Consumer Price Index or the inflation data. So when the inflation data is coming, there will be keen observation done on that, and based on that, markets can take a turn in the US. Similarly, in India, we have the Indian CPI data coming on Friday. So these are two data which is going to influence the market in the short term. So markets would be watching these data, and based on the data, markets will react to it. So the reaction can always be expected only on Friday for this week, and if the data comes after Friday day end, then we could have another important data, that is the TCS results, which is coming up on Friday. So that would come after market hours. So that is yet another very important data, because TCS leads the IT sector. They were the biggest IT company in India, and when their results come, that sets an expectation for the other IT companies. So that will be something that people will be watching, focused on, because IT sector has not been performing for quite some time, and especially the big wigs like TCS and Infosys have not been doing great. So TCS results, if it comes positive, if then we might see the markets actually seeing some short covering in the IT sector, that could take the markets further up. But if the results come negative, then, well, markets will react. So that is something which should be on the cards for next week. So all this expectation of all these movements can be seen in the next week ahead. So that is the third week of April. So this is the expectation for now. And coming to a longer term, like we've discussed earlier, the results of the election is coming on June 4th. So till then, markets would be in a volatile mode. But however, now that the markets are kind of broken out from 20 to 500 levels, there are chances it may go up to 20 to 800. So that is the expectation for this week. So at least in the upcoming weeks, if it touches 20 to 800 on the higher side, don't be surprised, because it is not a big movement. Though it might be a new record high, but now once the record is hit, there's no value for the high. So that is over. It's just a number then. So similarly, let's see what is going to happen in the upcoming week. Will the results season actually take the market higher or lower is something that we need to watch, because as the result season is kicking in, now the focus will be on results of most companies in India, because of which the markets could see news-based reaction in the market. So that is something which could kind of be tough for traders in the market. But then, as an investor, if at all you see a dip, the first thing you should do is buy the dip, because at this point of time the markets are in a position where any kind of selling that happens intraday, people are ready to buy and take the market higher. So that is a expectation for now. And if I look at longer term, like I told you, until elections, I'm expecting the markets to be in the similar range, probably 22,000 to 23,000. But after that is probably what we can see based on the election results, the way the market could change directions. So that is something that could be on the cards that we will wait for as of now. So as far as investment is concerned, I would say continue to stay invested. If it is a long-term investment, at least more than 5 years, that is your perspective, then just leave your investments as it is in the equities market, not a time to withdraw your money. But if you want the fund in next 5 to 6 months or 1 year or less than 3 years, I would say, then of course take the money, move it to something better, which can give you better fixed return yield. In fact, if you want that, we have multiple options available with us. Do schedule a one-to-one meeting with us at mpiinvest.com, and we can guide you on how you can get good fixed returns on your investments. In fact, there are very good government approved investments which can give you up to 14% fixed returns on your investment. So that's the kind of returns that could be expected. So do watch out for all these options available, and that could help you to manage your risk in the investments. So this is how it has to be always. Ensure that your investments can never be timed in the market, and those who try to time the market have never made money in the market. So just stay invested and make money in the market. Let us grow financially together. So that's it for now. This is something which I had to share with you. So let's see how the market behaves, how the TCS can impact the market, and also the CPI data, which would be a major focus. So these are a few things that we should be focusing on. And of course, like I told you, Thursday is a holiday for Ramzan. So Wednesday is when we'll have the expiry. So Wednesday we'll have the Bank Nifty expiry as well as the Nifty expiry, and I'm sure things are going to be totally volatile in the next 3 trading days. So wishing you all a great week ahead. And for MPI members, we have a first first Sunday of the month meeting today at 7:30 sharp. If you have not seen the link, do check out our broadcast group. The link is available there. Let us catch up sharp at 7:30 because you know that's the time you can meet other members, learn more, ask your questions, have a Q&A session, meet members, network with members, learn something new and grow together. So that's what MPA Invest is all about. Goodbye. Have a great week ahead. See you tomorrow with more details.